What would you do if you woke up tomorrow morning and your bank just disappeared? Sounds impossible? Tell that to the customers of Silicon Valley Bank who lost access to their money in 2023 when the bank collapsed in a matter of hours. This isn't fear-mongering. This is reality. And what would you say if we told you that leaving your money in the bank was one of the worst financial mistakes you'll ever make? While we've been taught that banks represent safety and security, here's the truth. Every day your money sits in traditional accounts. It's quietly being eroded by inflation, abused by politicians, and earning returns so pathetic they couldn't even buy a cup of coffee. The financial landscape has been turned upside down, and the old rules no longer apply. That's why today we're going to reveal 7 strategic assets the rich use that offer genuine protection for their wealth. Some will shield it from inflation's relentless assault, others will generate income while they sleep, and one might surprise you with how quietly it's been building fortunes for those who understand its power. And stay with us till the end, because we've got a bonus for you. But here's what we want to know from you right now. Have you or someone close to you ever been caught in a banking crisis? Maybe you experienced the chaos of 2008, or perhaps you've watched helplessly as fees and restrictions multiplied on your accounts. Share your story in the comments. Your experience could be the wake-up call someone else desperately needs. Before we get started, it's important to understand the economic storm we're navigating right now. Today, inflation continues its stubborn march at 2.8% annually, meaning your purchasing power shrinks every single day your money remains idle. The Federal Reserve maintains interest rates above 4.25%, making it expensive to borrow money and strangling the economy's future. Major banks are already cracking under pressure, and whispers of new import tariffs threaten to push prices even higher. Meanwhile, what's happening to your money in traditional accounts? It's losing value, earning practically nothing, and remaining completely exposed to the very systemic risks that brought down institutions we were taught were untouchable. The game has changed, and we need to change with it. These 7 assets represent a new approach to wealth protection, one that acknowledges today's realities rather than yesterday's broken promises. Asset 1, Treasury bonds, the government's pledge. We're starting with something that might seem traditional, but here's the twist. These bonds are currently offering returns that most banks can only dream of matching. When you purchase Treasury bonds, you're essentially lending money to the United States government, and it's making you rich for the privilege. Right now, U.S. Treasuries are delivering over 4% annually, sometimes significantly more depending on the term you choose. Compare that to the average savings account, and the difference becomes painfully clear. But the real magic happens during times of crisis. When markets panic and uncertainty reigns, investors stampede into bonds like passengers rushing to lifeboats, driving their value even higher. The beauty lies in their predictability. We know exactly what we'll receive and when we'll receive it. For those who value sleep over speculation, Treasury bonds offer something increasingly rare in today's world: genuine peace of mind. Platforms like Treasury Direct allow us to buy directly from the government with as little as $100, while brokerages like Fidelity and Vanguard provide additional options and flexibility. But here's where things get interesting. What if we wanted an asset we could actually see and touch? Something that generates monthly income while potentially appreciating in value? The next asset has been creating millionaires for generations, and smart money has been using it to quietly position itself for what's coming next. Asset 2, real estate, the tangible wealth builder. They say money doesn't grow on trees, but a strategically purchased property can be as good as a money tree, yielding fruit for you month after month. Real estate represents something increasingly precious in our digital world, a tangible asset that exists in physical space, generates income through rent, and historically appreciates over time. Here's what makes this particularly compelling right now. While our bank accounts lose purchasing power month after month, properties in cities like Austin, Nashville, and Raleigh have seen values increase by over 40% in just the past 3 years. That's not luck. That's wealth creation on steroids, and the rich target growth markets like these when they're buying real estate. The U.S. real estate market experienced a slowdown in 2024, but in 2025, select areas are already showing promising signs of recovery, particularly in urban areas and logistics properties. For those without enough capital for a traditional down payment, real estate investment trusts like Prologis or individual stocks like Realty Income can let you get in the game for as little as $1 on apps like Robinhood. Yes, with physical property, there are maintenance costs, taxes, and vacancy risks to consider. But for those who understand location selection and property types, real estate can serve as both a wealth preserver and a wealth generator, providing monthly income while our other assets fluctuate. Beyond real estate, there's something even more fundamental we should consider. What happens when currencies fail, governments collapse, and entire economic systems reset? Throughout history, there's been one asset that has survived every crisis, revolution, and catastrophe. The next asset has been humanity's ultimate backup plan for over 5,000 years. Asset 3. Gold, the eternal refuge. While governments destroy your purchasing power and banks lurch from one crisis to the next, gold remains unchanged, untouched, and unimpressed by human folly. For millennia, gold served as the currency of kings, nations, and empires. When everything else fails, gold endures. This isn't just historical romance. The numbers tell a compelling story. In 2025 alone, gold prices have already surpassed $3,000 per ounce, reaching historic highs driven by global uncertainties, geopolitical tensions, and growing concerns about monetary policy. Unlike paper currency, governments can't print gold. That's why when everything is breaking down, people turn to the one asset that is scarce, physical, and indestructible. Even the world's most sophisticated central banks are loading up on gold reserves, understanding something that many individual investors have yet to grasp. When the financial system shows cracks, gold becomes the ultimate insurance policy. You can purchase physical gold through reputable dealers like APMEX or JM Bullion, or gain exposure through ETFs like GLD or IAU, if you prefer not to worry about storage and security. Charlie Munger, Warren Buffett's longtime partner, once observed that gold is a great thing to sew into your garments if you're a Jewish family in Vienna in 1939. He understood that gold represents protection against systemic collapse, a harsh lesson learned through history's darkest chapters. The only trouble with gold is that it just sits there. So, what if we wanted our wealth protection to be something we could actually enjoy? Asset 4. Collectibles and luxury items. Beauty that appreciates. A Rolex Daytona, bought by Paul Newman for $200 in 1968, roughly $1,900 in today's money, recently sold for over $17 million. A 1960s Ferrari 250 GTO commanded $70 million at auction. Even a Banksy artwork increased in value after dramatically self-destructing at auction. These aren't isolated incidents in how we think about value preservation. Believe it or not, certain Lego sets have appreciated over 380% in the past decade, outperforming many traditional investments. Rare sneakers, vintage watches, classic cars, and fine art, even rare comic books and Pokemon cards all share common characteristics: scarcity, aesthetic appeal, and passionate communities of collectors willing to pay premium prices for ownership. Companies like Rally and Masterworks have democratized access to this asset class, allowing average investors to purchase fractional shares in fine art and collectibles. What was once available only to the ultra-wealthy is now accessible to anyone who understands the market dynamics. The key lies in combining passion with deep knowledge. Those who succeed in collectibles markets typically have genuine appreciation for their chosen category, understanding both the emotional and financial drivers that create value over time. But sometimes, the most powerful asset isn't something we buy. It's something we build. What if instead of hoping our investments perform well, we took direct control over our financial lives? The next asset doesn't require market timing or complex analysis. It requires something much more valuable. Asset 5. Your own business, the ultimate control. This asset might be the most powerful wealth-building tool available to any of us. While parked money loses value and banks decide what to do with our deposits, a business gives us something increasingly rare: complete autonomy over our financial future. Jeff Bezos began selling books from his garage. Elon Musk invested everything he had in startups that seemed insane at the time. Sarah Blakely started Spanx with just $5,000 and became a billionaire by solving a simple problem women face daily. Your neighborhood pizza shop owner who started with one oven and a counter might now own 3, 5, or 10 locations, all because he decided to make money work for him instead of letting it sit idle. A well-structured business can generate returns of 100% monthly or more, while banks offer us 1% annually if we're lucky. Modern technology has obliterated most barriers to entry. Platforms like Shopify enable e-commerce businesses with minimal investment, while marketplaces like Etsy allow us to monetize skills and crafts we already possess. And with AI, millions of doors that were only available to large companies are now open to the little guy. The infrastructure exists. You just need to decide which path is right for you. Yet, there's one more asset we need to discuss, one that combines the elements of everything we've covered. In an emergency, it offers the scarcity of gold, the growth potential of business ownership, and is more liquid than anything else. But it also represents the most controversial bet we can make. Asset 6, physical cash, the emergency lifeline. With all the bad-mouthing about cash we've done, you're probably surprised to see this here. But physical cash, strategically stored, has some unique advantages. During banking crises in Greece in 2015, Lebanon in 2019, and even the United States with Silicon Valley Bank in 2023, thousands of people were suddenly cut off from their own money. Banks closed, withdrawals were limited, ATMs ran empty. If this happened to you, you'd need cash to buy milk, eggs, gas, and all your essentials as you weathered the crisis. Having a physical cash reserve isn't paranoia. It's economic survival prep. Cards fail, systems crash, networks go down. Imagine being stranded with no signal, no bank access, no digital payments, and a card that won't work at the gas station. In these moments, paper currency becomes invaluable. Financial expert Susie Orman recommends keeping at least $1,000 to $2,000 in cash at home in a secure location. Not as an investment, but as insurance against system failures. This isn't about storing our entire net worth under the mattress. It's about maintaining access to immediate liquidity when digital systems fail us. Physical cash offers something increasingly rare in our interconnected world: total freedom from dependence on technology. When everything else requires passwords, networks, and permissions, cash just works. Now for the 7th asset on our list, the one that's been quietly outperforming every traditional investment while sparking intense debate worldwide. This asset combines cutting-edge technology with ancient monetary principles, and it's forcing us to reconsider everything we thought we knew about money itself. Asset 7, cryptocurrencies, the digital revolution. Here's the most controversial asset on our list, the one many dismiss as speculation. Yet, it's outperformed every traditional asset over the past decade. Bitcoin isn't just digital currency. It represents an entirely alternative value system. No banks, no government control, no unlimited printing, just mathematical scarcity and global consensus. Only 21 million Bitcoin will ever exist, period. This built-in scarcity makes it fundamentally different from any currency in human history. If you had invested $100 in Bitcoin in 2010, you'd have over $50 million today. While past performance never guarantees future results, these numbers cannot be ignored. Michael Saylor, CEO of MicroStrategy, transformed his company by converting over $4 billion of treasury reserves into Bitcoin, calling it digital gold and the ultimate hedge against monetary inflation. BlackRock, the world's largest asset manager, now offers Bitcoin ETFs to clients. El Salvador has made it legal tender. Major corporations worldwide are adding it to their balance sheets. Bitcoin operates 24 hours a day, 7 days a week, with instant global liquidity. Unlike traditional currencies, it can't be devalued by political decisions or central bank policies. You can start with as little as $1 on platforms like Coinbase or Cash App, gradually building your position over time. Yes, it's volatile. Yes, there are risks. But in a world where even the most established banks can fail overnight, and governments accumulate unpayable debts, we can no longer pretend that cryptocurrency has no part to play in wealth protection. If gold was the safe haven of the analog era, Bitcoin might serve that function in our digital age. So there you have it. 7 assets as an alternative to holding all your money in the bank. But wait, we have something special for those who've stayed with us until the very end. Here's a secret the banking industry desperately hopes we never discover. While they're graciously paying us less than 1% on our savings, they're turning around and lending that exact same money at 15% or more. They've built trillion-dollar empires on this simple math, and most have been unknowingly funding their profits while accepting scraps in return. What if we told you there's a way to flip this equation entirely? What if instead of being the customer getting exploited, we could become the bank collecting those premium returns ourselves? Bonus asset: peer-to-peer lending. Claiming your share. This might be the most empowering financial strategy we can implement. Peer-to-peer lending allows us to lend money directly to individuals and small businesses through sophisticated online platforms, completely eliminating traditional banks from the equation. Platforms like Lending Club, Prosper, and Funding Circle have created transparent marketplaces where we can connect directly with vetted borrowers seeking funding for debt consolidation, business expansion, or personal investments. While your money dies a slow death, rotting away in savings accounts, earning virtually nothing, peer-to-peer lending typically generates returns between 5% and 10% annually, sometimes significantly more. That's not just beating inflation. You're actively building wealth the same way banks have for centuries. The brilliance lies in the diversification strategy these platforms enable. Rather than making one large, risky loan, you can spread your investment across hundreds of small loans, dramatically reducing your exposure to any single borrower's circumstances. You can start with as little as $25 per loan, carefully selecting your risk tolerance, loan categories, and borrower profiles based on transparent credit grading systems and detailed financial information. Each month brings passive income as borrowers make their payments, both principal and interest flowing directly into your accounts. It's like maintaining a portfolio of mini mortgages working tirelessly on your behalf around the clock. With P2P lending, you're not merely preserving wealth, you're actively multiplying it while genuinely helping real people achieve their financial goals. Remember, honest assessment includes recognizing the risks involved. These loans typically lack collateral backing, meaning borrower defaults can result in permanent losses. Platform risk exists too. So, if the lending company itself encounters financial difficulties, your fund access could face disruption. Most loans carry 3 to 5 year terms, preventing the immediate liquidity we'd have with traditional savings accounts. Unlike bank deposits, no FDIC insurance protects us from potential losses. Yet here's the fundamental reality we must confront. In an era where traditional banks offer us virtually nothing while capturing enormous profits from our deposits, peer-to-peer lending provides genuine opportunity to earn meaningful returns while maintaining complete control over our investment decisions. This works best as one component of a diversified wealth strategy, rather than a total banking replacement. But for those prepared to accept calculated risks for substantially higher returns, it's rapidly becoming the preferred method for making money work exponentially harder. There you have it. 8 assets that offer genuine alternatives to traditional banking. From the government-backed security of treasury bonds to the revolutionary potential of cryptocurrencies and peer-to-peer lending, each serves a specific purpose in a well-balanced wealth protection strategy. The question isn't whether you should diversify away from traditional banks. Recent events have already answered that. The question is, which of these assets align with your personal risk tolerance, time horizon, and financial goals? Tell us, which asset are you most interested in? Share your thoughts in the comments below. We read every single one and are genuinely interested in your financial journey. Your insights and questions help us create content that better serves your financial education. And if you enjoyed this content, it would really help the channel out if you subscribed and forwarded it to a friend. Let's keep stacking wins.